In this video, I'm going to show you guys the best swing trading strategy and also how we can make sure that we are trading alongside the order flow of the institutions. This is a very simple strategy which entails three parts. Number one is a break of structure and we want to see an impulsive break. Number two is identifying our POI, which is our point of interest. That's where we are going to be looking to execute the trade. And then number three is simply just executing the trade and looking at our stop loss placement. Okay, so let's break this down step by step and jump straight in here for you guys. Okay, so this is Euro USD on the 1 hour time frame. Okay, the first thing that we want to add to our charts is the 50, the 100 and the 200 moving average. Okay, so if you type in 50, 100, 200 moving average, it's this one here by Cryptological, Be Cryptological. Okay, so store that, add that onto your chart. It's three indicators built into one, so you only need to use one of your indicator tabs and you can add all three to your chart. Okay, so now that you guys have added that to your chart, it's important to note, so for a long setup, we want the 50 to be on top of the 100, on top of the 200. Okay, so we need this order. Okay, we need the green to be on top, the blue in the middle, and the red on the bottom. That means the 50 is greater than the 100 is greater than the 200. So if and only if these moving averages are lining up in that order, that will indicate to ourselves that this is a long bias market. So this indicates that the institutional order flow is to the upside, and therefore the institutions are going to be reaching for the liquidity to the upside. So for example, we have these highs here. So when price pulls back in, price is going to look to reach above these highs and reach for all of that liquidity. Likewise, now that we have a new high in the market, when price comes back in here, ultimately we're going to be reaching for the liquidity above the most recent higher high. But I'm going to break this down step by step, so don't worry guys, okay? So what we have here is we have a strong break of structure to the upside. That's indicated by a BOS. So we can mark on number one, which is our break of structure. So break of structure, okay, and let's play this on a little bit here. You can see price then goes ahead and breaks structure to the upside again. So we can move on our break of structure. That's going to be right here, okay. We can mark on our impulsive leg. So this here is the range that we are looking at, using to trade off. So we can mark that on as an impulse. We have an impulse high and a impulse low. Okay, so this indicates that, buyers are in control in terms of market structure. So just looking at naked price action, buyers are in control. We've broke structure impulsively. You can see that's indicated by this gray box highlighting this price action. We also have this low here, which is the start of the impulse. Okay, now this is the most important part of the strategy. Okay, so number two, identify a POI. And what we use here is where the institutions last got involved in this market. So if we zoom in here, I want to make this very clear and simple for you guys. Okay, so it's looking before this higher high. Where did the institutions buy from? They bought from exactly this area here, which was just below the 50 moving average. Just below. You can see price sort of just closed below, wicked below the moving average, and then pushed to the upside. It's not really a wick, but price just came below and then pushed to the upside. So when we're looking for swing trades, we're not looking to time the market perfectly, but what we are looking for is price to come at a nice discounted price to where we can enter, and then we have a safe stop loss. Okay, so we've identified a POI. We understand that if price comes back to the 50 moving average just below here, we can then look to buy. Okay, so we're stacking confluences in our favor. So we've got a break of structure, we've got an impulsive move, we have a point of interest, which is, you know, just below the 50 moving average. That's where the institutions bought last time. So more than likely, that's where the institutions will buy this time. And then we'll look to target this to the upside. So let's play this on a little bit. We're looking for price to just come below our 50 moving average. So you can see that's exactly what happened here. So our entry is literally just below the 50 moving average, and our stop loss is around 25 to 30 pips. Okay, so this is a swing trading strategy. You can see here, this has given price quite a bit of room to breathe. Okay, you can have a very conservative stop loss below this lower high here. Before this higher low here. Or you can have a stop loss around, 25 to 30 pips. But the main idea, the ideology, is to make sure we're giving price, room to breathe. We're not trying to time this market perfectly, but we know institutions should be involved around this area, but we're giving it a bit of room just in case they want to bring price a little bit lower. Okay, because, in theory, there is an order block around this area here, so price also may come down into that order block, tap, wick, and then, push to the upside. But in terms of, this basic swing trading strategy, we're just focusing on where the institutions were involved last time. That was just below the 50. So that's where we're going to be looking at executing this time, and then managing that trade with our stop loss here. So we can risk 1 to 2% on this trade, and then we're going to allow this to play out there. We triggered in, and see price came down a little bit more, and then ultimately strongly pushed to the upside. Targets, at least break even is going to be around this high here. This is our equal high. And then we're going to be looking, as I said, to run the stops, to run all of that liquidity and reach for that above the higher high. Okay, so in terms of market structure, we have a higher low followed by a higher high. So we are anticipating the new higher low. We don't know exactly where it's going to form, but we know based on recent data that it's going to be just below the 50 moving average. We can enter there with a stop just below the low, or around 25 to 30 pips. Give it some room to breathe, and then we're looking for that continuation to the upside. Okay, and this is literally a trade that I executed yesterday. This is on Euro USD, and we're currently running risk-free on the runners, and yeah, we're break even on the runners. Okay, so this is a risk-free trade, and yeah, this is the swing trading strategy, right? It's very, very simple. Okay, so we're using a few confluences. We're using the break of structure to indicate a buyer's market. We're using the recency bias, which is where did the institutions buy before, and then we're using a execution around that area with a stop loss to give this trade some room to breathe. Okay, so we're not looking to time this market perfectly, as I've said, but we're looking to get triggered in this market to where we can have a safe stop loss. And if this trend's going to continue, we're triggered in and it will continue, or we're stopped out and we're invalidated, and in theory the trend should reverse based on the concepts that we've covered. So that's this swing trading strategy using institutional perspectives. Let me know your thoughts, guys. Okay, please like, comment, and subscribe, and I'll see you guys in the next one. Take care, guys. Bye-bye.